Ugh. Well, good morning and happy Mother's Day, everybody. We're going to react to the inaugural live stream of Meet Kevin and his house hack adventure, which is totally legit and is not grifty at all. I'm very excited about this. I am actually, as a matter of fact, the first house hack analyst in the world. I think that's a world record. I think I should go down in the history books as the first person to objectively cover House Hack Incorporated by the world famous Meet Kevin. So we're going to go ahead and hang out, wait for his stream to start. I guess we can check out some of his comments. I feel like he's been deleting some comments. He has this on two different places. He has it on his House Hack YouTube channel. He's got like a separate House Hack YouTube channel. And then he's got this video streaming on his primary channel, Meet Kevin. And I swear I left a comment on it asking him to show the financial statements for this quarter, Q1 2025. And of course, they aren't released. So I've been checking the SEC. If you go to sec.gov and you look under the Edgar system, you can search for all of Meet Kevin's filings. So you can track him, play by play by play. That's where I got his annual report from. And there's a lot of stuff here. I know one of these is when he got his subscription rights forgiven. Basically, he took on debt to purchase stock. So he was gifted $1 million in voting, or 1 million shares of voting stock. And instead of paying the $1 million to pay for the stock to contribute to the business, he took on a loan. So he owed House Hack money. And instead of paying off the loan, because supposedly he was investing with you, the investor, he has skin in the game too, it got forgiven because he's just such a great, amazing guy that I guess he doesn't have to pay for his own stock, of which he has complete voting control. This clown, Meet Kevin, controls the entire voting of this company. I've got his website up here too. I'm going to do another video covering his valuation. He values his company between $92 million to $131 million. That's the valuation of his company. The method that he used to get there is ridiculous. Okay, but we'll cover that in another video. So let's go ahead and wait for the stream to start. So let's see some comments here. Kevin, shouldn't you be taking Lauren to breakfast instead of live streaming? Oh, maybe he had breakfast at 6 a.m. because it's Mother's Day. I just called my mommy. Okay, we FaceTimed a little bit. Oh, look, he turned on subscribers only mode. Only channel subscribers of 1 hour or longer can send messages. Let me see if you can actually see my comments. Let's go. I'm excited about this. Let's go. I wonder if he's going to block me. So the whole purpose of this, and I'm going to pull up my video just to make sure I can see comments and make sure the volume's good. The whole purpose of what he's doing today is a rehearsal for when he goes public, because publicly traded companies, they have earnings calls every quarter. And his intention, of course, is to go public, because when you have a company that's publicly listed, you can pump the price. And you, as the initial investor, if you're able to pump the price, can make a freaking fortune. So that's his master plan. Obviously, he wants to be able to claim that he's a billionaire. And he might potentially be a billionaire on paper because he's going to try to pump this company to kingdom come. Okay. All right. So I got my comments up. Let's see. I'm always paranoid the volume doesn't work. So I've got my comments here just to be sure. So it's so tiny, though.
It's so tiny like my pee-pee.
Kevin, are you late? This is unacceptable. You are a CEO of a publicly traded venture of a company. Unacceptable that you're late, Kevin. All right, so Jerry Carey says, your comment got blocked. I can't see it. Shocker. How don't you dare criticize Meat Thruster. Don't you dare ever read his 10K. Oh, God. He's crapping his pants right now. He knows Daddy's watching. He knows Daddy Long Dong is going to be reacting. This is going to be a fun event. I don't normally do this. An entire earnings call. I normally don't spend any time listening to companies' earnings calls because I have better things to do, like, I don't know, staring at the wall or scratching my you-know-whats. But when it comes to me, Kevin, I always find time to roast Kevin. Always, always, always. And my first criticism is that he's late to his own earnings call. I've been late to live streams before, but I'm just a dude on YouTube talking trash, exposing clowns. I could be late. It doesn't matter, okay? This is a serious venture. Millions of dollars are at stake. Okay, somebody says the EPS better be positive. I highly doubt the EPS is going to be positive, okay? Let's see. What makes Meet Kevin's earnings call so... Because it's me, Kevin. I'm the OG Kevin Slayer. Come on, numbnuts. He's going to freaking reschedule it, watch.
Like something came up.
And it's also something that small venture capital style startups usually don't do. But you know me, I try my best to be as transparent with everything as possible. And everybody knows there are ups and downs in business. But boy, this is a really exciting moment because we think we are delivering really exciting news. In addition to that, it's the first time that we are doing not only a public earnings call, but it's just something unheard of. And we think more businesses should do it, especially in the private capital space. So that said, comments in today's call are based on predictions and expectations as of today. Actual results could differ materially due to a number of things or uncertainties, including those mentioned in our recent filings with the...
Wait, he just said their predictions and actual results may differ materially. So what? He's just pulling out a bunch of nonsense. Oh my God, it's already starting. It's already starting stupid.
Securities and Exchange Commission, the SEC. Okay, with that said, let's get started. So House Hack, as a reminder, began operating in August of 2023. Because if you'll remember, we began fundraising in late 2022, but we said we weren't going to begin operating until Q3 and Q4 of 2023. And folks, I'm pleased to announce that is exactly what we did. And in the last 1 year and 8 months, we had a simple promise. Invest in us, and we will build a team to build and buy high-quality real estate, renovate it, and or develop it.
Including his own properties. Yeah, that's right. His corporation bought real estate from him, and he personally profited from that. But it must have been a wedge deal, bro.
And in the future, we'll work on repeating the process through strategic sales and hopefully a future IPO. In just that 1 year and 8 months, we deployed over $50 million of real estate into markets that were not affected by the COVID bubble phenomenon. Markets in parts of Florida and Texas, for example, are currently down 25 to 30% since we began our exploration of which markets House Hack should begin investing in. We've also seen some markets suffer even worse declines.
And you know what's ironic is he bought a jet so he could dart around and buy all these different properties. But then most of his properties are in California where he lives. So why did you need the freaking jet to travel when you're buying the properties in the state that you live in? I mean, I could see if you were flying to like Maine, okay, maybe, but you could just drive, bro.
Whereas if you compare it to the markets that House Hack chose to invest in through the research that myself and my team conducted, in the 20 months that we've been operating and since we started collecting investors, we generated over $10 million of equity for investors through our real estate acquisitions, and we purchased in markets that have not seen declines. They have seen appreciation through Q1.
How did you generate equity? Are you talking about fair market value? Because if you're talking about book value, that's literally impossible. You don't generate equity. What? You generate equity through profits, but there are no profits. So you've actually destroyed equity.
Of 2025. This means we now jointly own a real estate-backed company with over $60 million of real estate assets with not a single dollar of bank debt. Now, the haters probably won't like that, but fortunately, there are very few of them Because back when we started in 2022, everybody said it would be impossible for us to scale buying wedge deals.
What was the convertible? He issued $10 million of convertible debt. Okay, if he means bank debt, like he borrowed from JP Morgan. Okay, yeah, he didn't borrow from JP Morgan. He borrowed from you. And the fact that you're bragging about not having a lot of debt is irrelevant because most of your ventures are equity financed. You issued stock. Well, people paid for stock. You didn't pay for your own stock. But that's not unheard of. I mean, real estate investment trusts, companies that invest in properties all the time, they issue shares a lot to generate equity, to generate capital, excuse me. That's not unheard of. That's not unique. That's not something to brag about. Oh, I issued stock and I bought houses with the proceeds. Wow.
And that's exactly what we did. We spent 50, and now we have a portfolio worth over 60 with zero bank debt. On top of that, we are super uniquely positioned for whatever may come of the economy. Should we end up hitting a wall in June or July because of empty shelves or whatever drama may happen, or should we end up in a soft landing? It doesn't matter to HouseHack. First, should we fall into recession, we believe we're going to be able to strategically deploy the $12 million of cash we have available now into strategic opportunities and in markets we believe maybe are bottoming out in the future.
Including one of your own properties, right, Kevin?
Maybe we'll have an opportunity to, at some point, buy the dip in Austin, Texas, or Florida. We'll see. Remember, I spent 16 years growing up in Florida, so I've got a lot of strategic insights about Florida and where to buy and where not to buy. That's it.
I grew up in Italy and in South Korea. That doesn't mean I understand real estate in Italy and South Korea. I have no idea what's going on with Italian and South Korean real estate. That's nothing to. Oh, I went to preschool in Florida, so I know a lot about the real estate there, guys. Yeah, American flag pin.
Said, we will also be very patient and strategic with our acquisitions because we want to see how markets play out in the second and third quarter of this year. We expect to go buying again towards the end of the third and fourth quarter, though we'll keep that optionality open. Should we execute a soft landing, we will continue to deploy capital where it makes the most sense. At the moment, the highest value opportunities that we see while we wait with our opportunity of cash is planning and developing our accessory mission of providing high quality homes. We expand the capabilities and hopefully, knock on wood, the valuation of HouseHack as we continue to diversify the company. Somebody in the chat is like, this is pre-recorded. It's actually not. Welcome to the first live stream of a HouseHack, but we'll be getting to questions in a moment. This is the early part of the earnings call. See you in the chat. Technically, might not be used to listening to actual formal earnings calls where a CEO makes an opening statement, then you get into the financials of a company, and then you get into the Q&A.
Are we actually going to see the financials, Kevin? Let me check Edgar. Sorry to keep pausing, but I can't just talk over him. Oh, no report on the SEC website. Okay. Everything he's saying is probably nonsense.
We're not at the Q&A yet, if you haven't noticed. Let's continue with the remarks. So remember, we are not just a property manager, a renovator, a wedge deal hunter, a developer, or all of these things. We believe in the future, we are also going to be a provider of zero-fee real estate funds, which will enable us to multiply our efforts substantially. And so we're really excited about the future and what we're able to do in the future.
Zero-fee real estate funds? Yeah, I'm sure there's no fees there, Kevin.
That's it. In August of 2024, just 1 year after we first raised money at $1 per share, we received an independent Wall Street valuation that we could IPO in January of 2025 for between $1.40 to $2 per share, representing a 40 to 100% increase in the value of day one investor shares.
Who on Wall Street did this? Ross Gerber? Oh, in a future video, I'm going to explore his claims of his valuations because they're complete freaking nonsense. Okay? But, I hired a Wall Street firm to do an independent analysis, and they said, oh, yeah, you could IPO with this, bro. Yeah, totally, bro. I mean, Tattooed Chef IPO'd and went up like 100%, I think. That doesn't mean anything. What's the actual value of your business? I'm not sure. You're losing money, brah.
That was just 1 year after we began operating. And I'll tell you, our situation has substantially improved since August of 2024 when that valuation was conducted. You'll see in our financials that we have substantially cut expenses and increased to now EBITDA profitability, which we'll talk.
Earnings before interest, taxes, depreciation, which is a huge expense for a real estate company, and amortization. I'm profitable before all my expenses too, bro. Yeah, I just look at my revenue. That's my profit. What a clown.
Talk about and show the financials in just a moment, and then we'll be open to Q&A. Today, we are raising money again. We are raising at the low end of this range at $1.40 to both accredited and non-accredited investors. And we're offering a 5% yield for the investors.
Okay, now he's, so before, wasn't it $1 per share? Now he's asking for $1.40 per share. And his justification is, oh, this Wall Street firm who I don't know who it is said that we could potentially IPO in January 2025, which it's now May 2025. We could IPO it between 1.4 to 2.0, but I'm giving you a deal and only doing 1.4. You're losing money. You should be trading below book value. What? Now he's asking for more money from you. He didn't put a lot of money into it. Most of his note was forgiven. Grifter.
Was investing at $1.40. A lot of our original $1 investors are also investing in the $1.40 round, picking up that 5% yield through conversion. And then both investors will have whatever upside beyond this. We actually think if we're valued at the high end of August's valuation today, people who are investing today are investing at a 30% discount.
Oh my God, dude. I can't take this anymore. He's trying to anchor your expectations. He's trying to sell you that you're getting a deal. Here's what's going on in this business. It is massively unprofitable. It is burning cash. And it is understating its expenses massively because they're not even charging the jet. They're paying a 25-year-old Mormon kid, intern with no real experience in real estate, what, $200-something thousand a year? And this is the capital you're giving to him. But you need to give him a premium because some random Wall Street clown said that it was worth between 1.4 to 2.0. That's all hypothetical nonsense. That's not fact. That's not reality. That's unverifiable. But he's using that to raise capital from you. Oh, yeah, bro. You should have said your valuation was 10x EBITDA or whatever, 10x book value. And then you could have only raised at $8 per share. You're shooting too low, Kevin.
To the high end of our August valuation. And quite frankly, I think we're worth a lot more than that today. But then again, maybe that's CEO bias and CEO optimism. That said, we believe that HouseHack, with just 1 year of full operations in 2024, and now 1 year and about 8 months of operations in total, just a first full year in 2024, has done a lot to calibrate our systems and operations. And our cash flow in 2024 was negative. It was negative by about $2.5 million. 2024 was extremely expensive, and we do not expect to repeat a year like that. 2024 was a startup year. It was our first full year in operations. In my opinion, we spent a lot of money on fundraising, IPO plans, calibrating employee expenses. Fortunately today,
calibrating who, McKay? Oh my God. So funny enough, yeah, I think he's right. He burned about $2 million of cash in operations. But his profit was, on the accrual basis of accounting, was just under a $5 million loss. I want you to ask him, if you're doing Q&A, why there was such a variance between operating cash flow being so negative and the accrual loss being much more negative, and ask him if the forgiveness of his debt that he owed to HouseHack somehow contributed to that loss. I should ask him that. You should ask him that, guys.
By our 20th month in existence, we are proud to announce that we are EBITDA profitable, and we generated over $10 million in equity for our shareholders through the wedge deals that we acquired.
No, you did not. You did not. Okay. You bought. He's saying that he's such a good investor that he got these properties and then he was instantly, the fair market value was instantly $10 million higher. There's no freaking way. Okay. That's all claims. It's all claims. It's all unverifiable. That's why he can say it. You can't prove him wrong. But do you believe him? I don't. I don't trust this guy at all.
This means that while, yes, we had expenses in 2023 and more expenses in 2024, we well exceeded our expenses, in my opinion, by at least a factor of 2 in the equity we generated for investors. We also today reduced our operating expenses and expanded our gross margin, both of which you'll see the numbers of in our financial segment in just a moment. This is why we think our valuation is even greater today. See, when our valuation was conducted in August of 2024, we were in the midst of essentially valuation firm looking, oh, wow, you guys can buy wedge deals, but your expenses are a little, on the high side, but you're still producing way more money with wedge deals. Well, today we look and go, wow, EBITDA profitable and able to do wedge deals like this. This is why we think our valuation today.
I want to see can you release the valuation report? I want to read this. I want to read this, Kevin.
Is likely a lot higher. Obviously, no guarantees. But the way I look at it is I see HouseHack as my Berkshire Hathaway, a company where we build on strong foundations, take low risk, and expand over decades. I'm not here for
Berkshire Hathaway, Warren Buffett, HouseHack, meet Kevin. Are these two things equivalent, ladies and gentlemen? Oh, I'm dying, man. I'm enjoying this so much. I need to do that. I need to react to more earnings calls. Can you start more businesses, Kevin?
For a year or two and some flash in the pan AI startup. We are a real company backed by real assets. We're grateful for the work of our incredible team, Ken, McKay, Eric, Jim, Bill, Ross, you name it, our vendors, our tenants, and everyone else involved who works with or for our company. This wouldn't be possible without you. Now, some of you don't just put in 40-hour weeks, you put in 50, 60, 70 hours, and you believe in the vision of HouseHack. And so to those of you, thank you. Now, remember, my goal is to turn HouseHack into that Berkshire Hathaway. So as a result, we need to have
Stop it, Kevin. Please stop doing it. Don't you ever say that again. Berkshire Hathaway, Warren Buffett, and me, Kevin. Come on, man. This is man, he must be taking notes from Jeremy.
really strong financials, and that's what we're going to jump into now. Turning to our financials, our rental income more than doubled year over year to just under $600,000 in Q1 2025 at $598,133, representing a 116% increase in our gross revenues. We also improved our gross profit margin from 56% in 2024 to 63% in 2025 Q1, demonstrating finally more improved in-house property management efforts as we
And caveat, people. So remember at the beginning of this live stream, he said this is all like estimates. Okay. The financial report, which let me check, I don't think has been published yet. Of course not. May be materially different. We'll see what his profits are instead of what he's just babbling about like a clown.
scale the business. We continue to improve this as well. I expect that margin to be even higher in the future. In Q1 2025, we turned EBITDA profitable despite having over $6 million of real estate in development, not yet producing any yield. See, when we buy land or when we spend...
You know, real estate that's in development is not depreciated. Okay? It's not depreciated. You only depreciate real estate when it's placed into service. So what does that have to do with anything? Once that real estate goes into service, your depreciation is going to be higher. But then, but you're profitable because you don't count depreciation in a business that is extremely capital intensive. That's why you record depreciation, because it matches revenues to expenses. It's a very fundamental part of accounting. To exclude depreciation is like saying the houses were free. He just got free houses. There's no cost to that. The houses were free, bro. All his properties is just free. That's basically what he's saying. It's stupid. God, it's like me, my tax business. Oh, I'm profitable before tax filing fees. That's the main expense of my business.
Spend money on construction or plans, we're not able to reap any benefit of that producing asset yet because it's not yet a producing asset. This we expect will increase our rental revenue even more and our margins even more in the future. In addition to that, we have $12 million of cash on the sidelines, which due to the timing of investments and investor contributions isn't yet fully demonstrated in our interest income for Q1. That's because as investments come in, they take time to clear while we still owe interest on those investments, but don't yet earn an offsetting money market yield or rental revenue yield, most of which we expect to deploy over the year after Q3 of 2025.
Okay, the interest yield should be completely disregarded. He has cash, he puts it in treasuries or a money market, and it collects interest. That's not his core business. Doesn't matter. And I suspect yields may come down in the next couple of months or year. Completely irrelevant. All that matters is the profit that he's making from his properties. Do you think he's actually making extraordinary profits from his properties in excess of what other publicly traded REITs are making? I would hazard a guess that me, Kevin, is not finding as good of a deals as other publicly traded real estate investment trusts that invest in similar properties. Okay, I could be crazy here. I could be crazy. And I wonder if a lot of those publicly traded REITs have a private jet flying around. Okay, maybe some of them do, but for the scale of his business, no. You are understating your profits, Kevin. You have off balance sheet, off income statement expenses that you're not recording, which means your valuation is complete nonsense because you're hiding expenses by not charging your corporation for the private jet, which is instrumental to you developing properties. You should be recording that jet. You should be at least accruing an expense, some kind of expense and offsetting liability, so we can actually see the real profitability of your business.
Operating expenses also fell dramatically. So remember, operating expenses are expenses after our costs of goods sold, such as property taxes, insurance, maintenance, management, utilities, reserves.
Let's see. Rent expense, which is paid directly to Kevin from the corporation, $72,000 a year, if I recall correctly. Gerber baby getting $60,000 a year for looking at the financial statements. Okay. The $800,000 that was forgiven that me, Kevin, owed to the corporation, that was part of operating expenses. Free stock for Kevin. The money for McKay, the 25-year-old intern who's getting over $250,000 a year. Okay. I guess your operating expenses were pretty crazy last year. And I guess if you stop forgiving the debts that you owe to the corporation, I guess your expenses would go down.
Those are all part of our revenue minus cost of goods sold. Okay. That's part of our 63%. Now, our core administrative expenses, which are expenses such as IPO grade PCAOB audits. These are very, very expensive, mind you. These are rigorous audits that the company goes through, probably the most rigorous audits that you can get as a commercial company. This is where auditors viciously look through our leases, our purchase agreements, our conflicts of interest, any material concerns with the company. Well, we successfully completed our PCAOB audit for 2024, and we look forward to continuing our compliance with the highest standards in commercial accounting. Our PCAOB,
thank God for audits.
We audit expenses and our IPO level expenses are and have been reduced significantly. All of our operating expenses have been reduced by 42% year over year. And so now let's turn into actually looking at our Q1 income statement. So our Q1 income statement is right here. This is our Q1 income statement. You could see our total revenues of $598,133. You see our gross margin of 63%. Depreciation, which is obviously not an actual expense, of $228,000.
What? Excuse me? Depreciation is not an actual expense? Buying your houses and your apartments is not a real expense? Excuse me. Depreciation is a real expense. It reflects the cost of your assets that you're using in your business, and it depreciates that cost over the useful life of the asset. It is a massively important expense. Not a real expense. Get off the freaking call, boy. Get out of here. And of course, his operating expenses are consuming his gross profit. Look at that. Total operating expenses, $404,000, consumes all of his gross profit. Not even including depreciation. What a freaking clown, dude. Look at the interest expense, $110 million, $110,000. And what is that dividend income? Hopefully he says what that is.
This is our OpEx. A lot of this also related to the scaling of our company. And so we believe that we could probably substantiate somewhere around 2 to 4x the revenue that we have with the OpEx we have today. Remember, our operating company is a small company. HouseHack is still a small company. And as we grow to more properties, our OpEx butters out to more and more properties and revenues. This ends up leaving us with an interest expense and depreciation add back in, so an EBITDA of $37,000.
What? Okay, so we're in a real estate investment. How do you buy real estate, people? I have a mortgage. Okay? I have a house. I know you think I live in my mom's basement. That's not true. I borrowed money from the bank and I paid the bank interest. Is that part of my house's expense? I paid $254,000 for this house. By ignoring depreciation, he's saying that the loan, the $254,000, isn't a real expense. It's just magic house, bro. And the interest that I'm paying on the loan also isn't a real expense. Huh? That's the whole freaking cost. That's the vast majority of the house. Most of my house expenses are my mortgage, which comprises of principal and interest. Oh my God.
If you simply add back in depreciation of $228,000 in Q1, let's see here, 273 minus just the depreciation, we're operating at a Q1 loss of only $15,000 per month, which is very low for a company that's still deploying over $18 million of productive assets.
That seems like a lot of interest expense. I mean, but funny enough, if this was a real publicly traded company and he wasn't crowdfunding, his interest expense deserves to be double or triple that. I'm not joking, because he's paying a 5% interest. Excuse me. He's paying a 5% interest rate on his debt that he's issuing, which is the equivalent of a treasury, roughly the equivalent of a treasury on an after-tax basis. That interest, his rate is insanely subsidized because he has duped people into giving him money at an extremely low cost of capital. It's ridiculous. Okay? But I guess, the interest doesn't count. I guess whatever. And the interest is real cash that he's paying. Real cash. The depreciation, he buys the homes up front. That's a cash outflow on the investment portion of the statement of cash flows. That's the cash outflow. It happens at the time of the purchase. But the cost of that is reflected over time on the income statement. That's how depreciation works.
This, in my opinion, is fantastic. And it represents a significant improvement over the financials of 2024. And it makes us really excited about where we're going into the future. Given that so many startups today, especially in the venture capital space, are just straight up money losing, cash burning, no hope of being profitable companies, we're very, very excited. Look at, for example, I probably will make a separate video on this, but what I like to do is look at, for example, the numbers that you find over at a company like Boxable, which sells manufactured homes that, in my opinion, they misled investors on believing that these manufactured homes would end up.
You're not in the same business as Boxable. You're not manufacturing homes. You're buying them and you're either renting them or selling them. Why are you comparing your business to Boxable? I have a tax business. I'm going to compare my business to Walmart. I make so much more money than Walmart. Oh, those are some morons. Oh, an idiot.
Being homes that you could actually sell as an individual property. When we look at financials of a company like this, we see a company that's been in existence for 8 years that has a gross loss of $11.5 million. That's a gross loss. Revenues of just 3.3, cost of goods sold of 15.
He is such an idiot. I'm not saying this just to be rude. Well, I am. He's a moron. He's comparing a company that sells a product versus him acquiring it. He should be comparing his business to a publicly traded real estate investment trust that invests in single-family homes and apartments. That's a good comparison, Kevin. Not a random company that manufactures and resells prepackaged homes. Like the Walmart example. Yeah, I'm more profitable than Walmart. We're in the different business. Walmart buys and sells crap. I provide tax preparation and bookkeeping services. Totally different businesses. Oh, I'm so much better than Walmart. Oh, losers.
That's Boxable for you, just as an example. This is a company that's also doing Regulation A fundraise, and I've interviewed the executives at this company and made videos on the channel about them. And when you look at their total loss from operations, they're $52 million for the year in 2024.
Who cares?
And it shows you a company that's generating $3 million of revenue with a $52 million loss at Boxable is raising money and promising venture capital investors hopium, but they're nowhere even close to EBITDA profitable, which we are. And we've only been operating for 20 months, whereas Boxable has been operating for 2028, since 2017, so about 8 years. Now, turning to our Q1 balance sheet. If you look at our Q1 balance sheet, you can see that we have our real estate cost basis of roughly $50.7 million.
Okay, didn't he say that he had 12 million of cash? He's got 6 million of cash equivalents and 3 million of short-term investments. He doesn't have 12 million dollars of cash. Okay, let's see. How much debt does he have? Oh, he issued more bonds. So the last I checked, he had 10.4 million of debt outstanding. And he's collected 2 million more of convertible bonds. Who is giving this man money? Accumulated deficit, 5.6 million. So far, this business has incurred 5.6 million of losses. 5.6 million. Where does all of this business's equity come from? It comes from common stock. You give the business money, he gives you stock that may or may not ever be liquid or publicly tradable. I hope not, but it's going to be funny if it is. And then he takes that money, buys his own freaking house from himself at a profit, and pays his clownish intern, dork, $250,000 a year. Pays himself rent out of his corporation, pays Gerber Baby $60K a year, et cetera, et cetera, et cetera, et cetera. Okay. Let's see. So he's got 50 million of real estate. So the book value of this business is $47 million. So he's saying that his business is worth, let's see, 47 times 1.4. He's saying his business is worth between 65 million and 47 times 2, $94 million. Let's go look at what he has on his house hack. Estimated house hack valuation. How is this valuation is wrong? He's saying the valuation is between 92 million and 131 million based on 1.4 to 2x the book value. The book value is 47 million. So I guess it's on the low end. Yeah. he needs to update this. This is totally misleading and incorrect. 100% wrong. He's based, if he's saying that his business is potentially worth $131 million. Let's see, 131. What was it? 47. Now he's saying it's a 2.8x, 2.78x multiple. If these numbers are accurate. Complete garbage.
We believe that real estate is probably worth well over $60 million. I would guess at the moment, off the top of my head, probably somewhere between $62, $63 million. We'll call it 60 just to make it simple rounding, call it 60.7 to show that simple 10. That does not show up on a balance sheet unless, of course, you sell that real estate. So therefore, we have an asterisk and we say that management current estimates of these properties, based on the appraisals that we've gotten.
There's a reason accounting does that. Okay, it's called the principle of conservatism because clowns like Kevin will just make these claims. Oh yeah, it's worth 60 million, bruh. And if Kevin could do it, any CEO would do it. So accounting requires you to record it at cost, net of accumulated depreciation, because it's conservative, as it should be. Otherwise, clowns like Kevin can put asterisks on there and say, oh, we think it's worth $100 gazillion. No, Kevin. It's all unsubstantiated. You're just pulling it out of your butt. Oh, well, I think the real estate's worth $100 million. So if you put an EBITDA multiple of 12 million, then you should give me $5 per share. Like it's all nonsense. It's all sales pitch.
Or fair market value comparison approaches or whatever is over $60.7 million. Again, I think it's probably closer to 62, 63, but that's my opinion. Current cash and short-term investments available of about $9.6 million. We do have convertible bond liability of 12.7, but what you'll find is that upon conversion, we'll actually have no long-term debt. So when our
Yes, because they'll be converted to shares, diluting your future profits as a current shareholder of HouseHack. Wow.
convertibles hopefully convert to stock in the future, where our shareholders would be the beneficiaries of the upside in that valuation, we would essentially have $200,000 of liabilities.
Honestly, I think I would keep the bonds, bro. If you're only paying 5%, you're getting a deal from your moron fans. How are you getting a benefit as a shareholder? Okay, you own a smaller piece of the total business because there's now more shares created. What's the benefit that you're getting? I'd rather have the business keep the 5% interest debt. That's a steal.
And those would just be current liabilities, bills, property taxes to pay or whatever. We have no bank debt. We are entirely a cash-based business in addition to convertible bonds. Now, this is a March 3rd.
Well, no, he also drew on a line of credit. I think I forgot the amount, but he drew a significant amount from the line of credit and then paid it off. So at certain points throughout the year, yeah, he did have bank debt. He's relying on a bank to fund his operations. That's a fallacious statement that he made. And the funny thing is there's no comparison, right? There's no comparative balance sheet. You want to know why? Because he wants to hide the receivable that went away. We need to ask him what happened to that receivable and who owed HouseHack the money. Why is the receivable gone, Kevin?
31st statement. We currently have a cash position of closer to about $12.5 million. So our cash position is even higher than what's demonstrated in our March 31st end of Q1 financial statement. So
no, it's not. That's the cash that he had on that date. That's the point of a balance sheet.
Those are our financial statements. Now let's turn to some questions. There are some questions that were submitted to us by email or text message through our community link, and then we'll get to the some of the broader questions from the live stream. So question number one, Kevin, what is your bear, base, and bull outlook for HouseHack? Okay, so I just have.
All right, I'm gonna go take a tinkle while he answers this stupid question.
To disclaim this, that obviously this is my opinion. I'm a CEO. I'm biased. I think this is my little HouseHack, Berkshire Hathaway baby. I'm very, very excited about it. And I think there are endless things that we can do, not just over the next years, but the next decades. So no guarantees, not personalized financial advice. Don't invest in based on this. Make sure if you're ever thinking about investing, you read our SEC filings and all of the solicitation material. That said, I personally think that simply as a public real estate company in the future where we diversify into wedge deals, which you haven't really seen before, I think based on our original valuations, I think to me we're an easy 3x in my bear case scenario. That's my opinion. That's because when we look at comparison real estate that doesn't buy wedge deals, they're selling for book value multiples of anywhere between 1.8 to 2.5. And I think with wedge deals included in this, as well as the momentum that wedge deals create, we can be substantially higher than this, especially when you add in ADU development. Our base case, in my opinion, is not just adding in ADU development and real estate diversification and wedge deals, but also broader developments, so spec homes or even a smaller development communities. So we add more housing for communities as well, more in the direction of like a Lennar or Standard Pacific or whatever. I think we could potentially be somewhere around a 4 to 5x. That's my opinion as a developer. And in my bull case, this is the harder part. And this will really involve building out a zero-fee competitor to platforms like Fundrise, which also comes up a lot about in sort of our Q&A. I think we can create a company that's worth 10 to 20x or maybe even substantially more. That's obviously my opinion. Fundrise, for example, charges substantial fees when you actually look through all of their documents. You look at
Okay, then how are you going to be a profitable business if you're not charging fees? That makes no sense, dude. Of course he's going to charge fees.
0.15% platform fee, which they advertise to everybody. But then in their documents, you have another 0.85% for asset management, 1% for construction, 1% acquisition disposition, 1% lending, 3% liquidation, and more. You should really go through the documents of these competitors. They're really anything but zero-fee real estate. And part of that is because Fundrise, at least based on their last financials that I looked at, spends a lot of money on very expensive advertising. See, one of the benefits HouseHack has is HouseHack has never spent a single dollar on traditional advertising. And this is the value that we can provide not only through our community, but with our community.
Yes, because you have a huge grift platform where you can pump out nonsense and attract in morons to invest in your company. Yeah, well, you're so untraditional, bro.
And we think gives us a really big competitive advantage to expanding our business in the longer term. So no guarantees, but we think that zero fee platform competitor that we're creating is a significant game changer that comes with very, very little risk, in our opinion. The next question that came up was, what was the hardest operating expense lesson? So to me, that is don't hire too fast. When we had to deploy $50 million of real estate, it was easy to believe that we needed a massive team, which I found that we are actually much more efficient, not only on a margin basis, but an expense basis, with a more efficient SEAL Team 6 style team versus having.
Meet Kevin and McKay Thomason are SEAL Team 6. Okay, out of all the people you get rid of, you keep the 25-year-old? The intern, the Chilean Spanish speaker, that's the guy you keep on and pay $250,000 a year.
Having like an entire platoon, we can move a lot more nimbly, rapidly. We can learn more, coordinate more, work better together. We're much more synergistic with actually smaller than a massive team. And so I think this really, not only do the folks on the team deserve significant recognition for this, but it's also a useful business lesson for anybody watching. That sometimes smaller teams can be substantially more agile and profitable than larger teams. Another question that comes up is, when does HouseHack plan to go public? Obviously, this is entirely market dependent. One of the reasons I didn't want to go public in January of 2025 was because I felt the conditions for a very bad market coming up were present. It was also one of the reasons that after returning over 24% for investors in my exchange traded fund, which was a separate venture.
Wait. Huh? What? Did he just say that he returned 24% for his exchange traded fund? Kevin, your PP ETF got delisted. You closed it down because you were sucking. What are you talking about? What a clown. What a grifter. What a manipulator. Oh, I returned 24%. Yeah, maybe for like a month or two. What? His PP is gone. He didn't return anything. He returned the capital back to the investors. That's what he freaking did because he sucked so bad. And you know what he's waiting for, people? He's waiting for another clown market. He's waiting for an irrational, exuberant, anything goes market like in 2020 so he can go public. So his clownish company can have an insane valuation based off nothing. That's what he wants. He wants 2020. This guy would have gone public in 2020 had he had the opportunity. And he would have been a billionaire. Fake billionaire.
I decided to close that venture fund down, not only because I wouldn't have the flexibility to hedge for a downside, but I wanted to return that cash to shareholders, which we did in the exchange traded fund. Again, a separate initiative from House Hack, which now frees me up and closes down other distractions and lets me solely focus on House Hack.
No, you sucked. Okay, it's such an obvious twist of the facts. If your ETF was making a ton of money, you would have kept doing it.
So while that was a great success, and there were lessons that were learned in it, especially with the company that we were working with that I wasn't very happy about, won't mention them, we can now focus entirely on House Hack. And so we weren't really excited about the market in Q1. And sure enough, we've gone through one hell of some drama in March and April in public markets. So we're really grateful we decided to delay our IPO for House Hack. But now we can say we know what it's like to go through a significant portion of the IPO process, the pre-IPO process. And so we think it should be relatively easy for us to go public between 2028 and 2030. But again, that's going to really be market dependent. And I think by then we'll be through whatever this craziness is that we're going through.
2028 to 2030. You got a long time to wait to get your money back, people. Good Lord. Oh my God. Your capital's locked away for years now. You can't cash out. It's highly illiquid. Good job, people. You lent this clown money. He pays you 5% interest on the debt. For what? So he can jet around on his jet? Pretend he's like this hotshot CEO? 2028 to 2030. Get out of here.
Right now, whether it's a soft landing or it's a recession, that seems to be a coin toss right now. Either way, we think we're really well positioned to execute very well in either scenario, whether that's buying markets that have bottomed out in the third and fourth quarter, or maybe even next year, depending on how long the recession goes, if there is one, or just continuing to operate on a cash basis in the soft landing. Obviously, if there's a recession, because we have no bank debt, we actually think we could rapidly expand the balance sheet of House Hack. We think we could potentially crack the egg of our real estate and cash and leverage it with cheap bank debt should there be a recession and should the Federal Reserve panic with low interest rates. We actually think we could probably 4x the size of our real estate portfolio nearly overnight without having to, I mean, that's obviously an exaggeration. It takes time to deploy real estate, but it'll happen fast and rapidly to finance it. But we believe we could do that without significantly expanding our operating expenses and rapidly scale into a cheaply leveraged portfolio and a conservatively leveraged portfolio without, again, significantly impacting our margins. That's just my opinion. So, but anyway, yeah, 28, 2030, I think would be relatively easy. Based on historical performance, what is the supply of wedge deals at a 20% discount? So I've answered this one.
Softball questions here, Kevo. There's so many things to address. So this guy left a comment here. What about the $800,000 loan forgiveness, the high employee salaries, using investor money to buy property from yourself at inflated prices? Well, supposedly it was below fair market value. The shares with voting rights are 100% exclusively held by Kevin. These are legitimate questions, oh, Kevy boy. What's going on? You need to answer the hard questions. Be a man. Be a man. Show me your muscles, boy. That's not being a little bussy.
Very regularly and very consistently that there is no supply shortage of wedge deals. There is no shortage of homes that are unlivable that companies like House Hack can make livable and provide housing to people and increase the housing supply. There is no shortage.
Yeah, nobody else does that except Kevin. I'm going to get some water.
Shortage of that. There is only a shortage of capital. And that is why we're fundraising, because we have not sold any of our properties. So if we don't sell any of our properties and we don't take out debt. We don't do anything unless we fundraise again. If we fundraise, we can continue to expand the flywheel of house hack until, of course, we get to some form of zero fee real estate platform where we strategically leverage or sell some of our assets. Are you experiencing any rental defaults? The answer to that is no. We have 0 vacant units as of today, May 11th, 2025, and we are 100% paid and current for May of 2025. Can we invest in round 2 if we invested in round 1? And if so, how's that different? So yeah, we kind of hit that already. Yes, you can invest in round 2. I think one of the examples or sort of docs that I like to use is I like using this sheet here. Househack, not only on the househack.com website can you see
this mother effer has a house next to a gold bar. A house and a gold bar. I'm not seeing the connection here, Kevin. If you invest in Kevin, it's just going to print gold, and gold is shiny and pretty. You're going to get rich. Oh, look at the gold. It's so pretty. All right, so let's read this. Diversify away from most tariff risk. Okay, I guess all the materials that go into homes have no exposure to tariffs. Diversify away from long-term treasury risks and earn a 5% annual yield. So I want to diversify from the full faith and credit of the United States government, the richest, most powerful government in the history of the world, which pays a roughly equivalent after-tax interest. I want to diversify away from that, which also has a liquid market. His debt is not liquid. I want to diversify into house hack. What a joke. Diversify into American real estate. Yeah, nobody else does that. Diversify away from frothy VC AI valuations. There's plenty of publicly traded companies that aren't AI, my hot guy. You can get that in VTI, VT, VOO, SHDA. There's plenty of options out there that, and those companies make money. And then diversify into discounted fixer-uppers, okay. And then diversify away from rich stock market valuations. Rich valuations? I think your business is richly valued, clown.
Our the properties we have and the wedge deals we've done and pictures of them. But, we think house hack is really unique because you can diversify away from really rich, in my opinion, stock market valuations, diversify away from VC AI valuations. You diversify into American real estate. We're not really exposed to tariff risk. People are like, oh, but what about construction costs? Ironically, construction costs have been going down because of the tariff risk, because there's so much uncertainty that fewer people are building. And when fewer people build,
is that a good thing for the real estate market? There seems to be less demand. I mean, I don't know. I'm not a real estate expert, but I guess you are diversified from tariffs from China if you invest in house hack, because there's nothing else you could possibly diversify into.
Contractor margins actually go down. So we don't actually think we experience tariff risk. We think contractors experience tariff risk. That said, we are an opportunity to diversify away from longer term treasury risk while still earning a 5% annual yield. And
what are the risks of long-term treasuries besides inflation? That's the main one. Your bonds also have that, but they're also highly illiquid, and you are much, 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 much more likely to go bankrupt than the federal government.
And you diversify into fixer-upper discounted real estate. So that's our POV, and we think it's a great opportunity, and we think that's why a lot of people from round one who believed in us when we were literally nothing are also looking at increasing their investments. We think that's a really good testament. And we've got almost 2,000 shareholders, which is really phenomenal for the size of the company we are. It really shows that.
And only one of them can vote.
The support for what we're doing and the success that we're building is ubiquitous. There's always going to be the noisy sort of 1% or the loud, social media creator who inappropriately wants to, bag on house hack or insinuate whatever. But for us, the proof is in our pudding.
Guys, I'm inappropriately bagging on him for giving his stock note that he owed. The note that he owed, that's not a big deal. paying $250,000 plus to a 25-year-old with no experience. That's not a big deal. Oh, somebody buying his own property from an LLC called Really Toxic Assets LLC. That's a fact. That's not a concern. That's just a loud social media hater. I'm just a hater, bro. No legitimate concerns here whatsoever. All the failures of all his past ventures, his FTX endorsements, his PPETF collapsing. The list goes on and on and on and on and on.
But you're just a hater. You're just a hater. Whoa!
God, what a slime ball.
You know, we're not somebody trying to get views off of House Hack's name. We are a company that is PCAOB audited and compliant, one of the most rigorous auditing standards for righteousness. And
nobody's saying that your financial statements are misstated. Okay, I'm not claiming that. I'm not claiming that at all. If you got audited, great. I'm happy. That's not the problem with your business, Kevin. There's some serious intercompany related party transactions going on here. I would be. I'm going to start my own business and buy my freaking house with your money.
in commerce, we are EBITDA profitable, and we have the infrastructure to support, in my opinion, 3 to 4x the real estate revenues that we currently have. And so we're really uniquely positioned for growth. And that's before we even get to what I think is our 10-20x opportunity, which is our zero fee platform, our fund.
How is that a 20x opportunity if you're not charging fees? I'm not understanding, Kevin.
Rise competitor, which we're really, really excited about. So with that, I'm going to jump over into some of the YouTube questions here. I see somebody here says, let's see here, you can't really over leverage real estate. I think you're responding to somebody else's discussion here. Yeah, I mean that I think that's self-explanatory. Okay, so what about continuity plans? Yeah, I mean, look, obviously, this is a small company. We're a great team. We're sort of a SEAL team, if you will. But we've got great people involved. Lauren's involved. My father.
Okay, a SEAL team is the most highly trained Navy elite warrior personnel on the planet. That's a SEAL team. Okay, they're like the baddest of the bad. Kevin, a YouTuber, a finfluencer, an FTX crypto pumper, a guy that had his ETF collapse. Him and McKay is SEAL Team 6. Now, his father-in-law may actually know what he's doing. Okay, I think he's in real estate too. He might be the big boy in the room. He might be wearing the big pants. This is not SEAL Team 6. Okay, this is MEAL Team 6.
Laws involved. Ross is involved. We've got a great team in-house with our property management and acquisitions. I'm personally very confident that HouseHack could continue to operate in a profitable, very profitable manner, in fact, even if I weren't here. Now, obviously,
there are no profits, Kevin. There are zero profits. That is a misrepresentation of your business. 100%. You are adding back depreciation, which is the biggest expense of real estate. You're not profitable. Shut up.
Just like, an Elon Musk at Tesla, there's always a risk. You've got to have that vision and the founder leading the change. But I think, unfortunately, there's just always going to be a key man risk with a company until, they're very.
Yeah, by being in the business, you are the key man risk. The business would probably be better if your freaking father-in-law ran it. I'd rather try. I bet his father-in-law knows what he's doing. Have him run this business.
Very mature. I mean, I would even argue there's key man risk at Facebook. I mean, Mark Zuckerberg is most people don't know this, but Mark Zuckerberg basically owns the majority of all voting shares. And I actually think, that's a good thing. It's one of the reasons why Meta has been so flexible and why they've returned, such great returns to their share.
Oh, kind of like you. Oh, that's why they have such great returns to the shareholder, because one man who didn't really have to pay for all the shares because 800,000 was forgiven. One man runs the whole business. That's fine, bro.
Shareholders, whereas Elon Musk wishes he had more controlling power and is one of the reasons why potentially Tesla's performance hasn't been as great as Meta's recent performance. That's just my opinion. But great question.
No, you want the CEO to be accountable to the board, which is elected by the shareholders. The board's job is to watch out for the shareholders. If you don't do that, you just have this CEO that has ultimate power. And if the CEO is wrong or a clown and he starts making mistakes, there's nobody to check him. That's the risk of having all the voting shares owned by Grifterino here.
Great questions. So, the current minimum investment, which we don't expect to change, is $20,000. I would rather Hussack focus on an area of the market they knew well before taking risks outside of the bread and butter. Yeah, and that's what we're doing right now. Hussack has done very, very well into markets that we are experts in. So we're very, very excited about what we've been able to do with the deployment of capital. And in the future, should we expand into any new market, it would be very, very slowly at first. So are all of the houses in California? No, not all of the houses are in California. We're also exposed a little bit to Utah, but a lot of our real estate is either NorCal.
That figures with McKay.
Sort of by within an hour of Tesla Fremont, San Diego, a little bit of Ventura, some Utah. So we're in a relatively close radius, and we think we have a really, really high quality portfolio. A lot of people, I always think it's funny. A lot of people are like, ew, I don't like California real estate. The funny thing about California real estate is politicians in California are so bad at enabling housing growth that you don't end up getting that oversupply of real estate that you see in sort of red states like Texas or Florida, where you could build so much that you oversaturate with building, and then you create a real estate market crash, like the 20 to 30% declines we've seen in some of these markets because of overbuilding. It's a totally different market. Whereas in California, politicians limit how much you can develop substantially. And then we have fires, which destroy existing properties as well. We're fully insured, mind you. So it doesn't matter to us because we just get a big check if a property burns down. Knock on wood, nobody has ever hurt. We've never lost a property to a fire. And we don't think we're in any high fire hazard areas. But when you think about it, you're in a state where supply is actually shrinking and politicians don't let you expand supply. That actually
Yeah, that means prices that he's paying are massively inflated. You better pray that never changes. You better pray they don't liberalize the real estate market there, because you're going to be in deep, deep crap.
Increases property values for what's left. On top of that, our property taxes are based on acquisition price. So based on wedge prices, not on market value like they are in other states. So it's kind of remarkable what politicians have done in California. Has really done some really incredible stuff. So what differentiates your fund from a company like Open? So we're not a fund. Okay, we are a real estate corporation. We're a company. Again, we're like a I hope to be the future style Berkshire Hathaway, starting with something we're really good at. We're not starting in furniture. We're starting in real estate, which we think we're really, really good at.
I'm starting in rental property, so I'm going to compare my business to a company that manufactures pre-built homes. I'm more profitable than them.
Moron.
But Open Door is, in my opinion, a very low profit house flipping company where, the goal is really just to try to arbitrage the real estate commissions. They're basically, in my opinion, often overpaying for real estate, doing very low quality work. I've made videos on this before.
Open Door is, but Kevin with his 25-year-old and like 3 other people, they're getting better deals. Trust me, bro. It's magic. He's so good at this because he has no other distractions like his YouTube channel and all those other grift courses that he's pumping. He's able to really dive in and find those deals, unlike all these other stupid companies. He's got the secret sauce. Trust me, bro.
And then flipping the real estate to kind of arbitrage the real estate commission. So to me, they're more of a real estate commission play than actually, what we do. So that's my opinion. Househack portfolio, you can actually see it at househack.com. And you could sort of see a list of all of the different homes or properties over there. We don't put the addresses out mostly just because today is such a divisive day and age that we don't think it's
I found about 10 of them. Okay, I don't know if I want to release them because drama, but you can go to, you can type in House Hack Inc. into Google and you'll see property transactions. It's not hard to find. Well, it's so divisive, bro. I can't disclose them. Why aren't you disclosing the properties? Look at his expression. Ooh! People should be able to see what properties you're investing in. We want to see these wedge deals, bro. I've seen a couple of them. Okay. I'm not going over there to do anything bad to them, but I think if you want to be really transparent, you should publish the properties. Nobody's going to go to your house and do anything nasty. And like you said, even if somebody does do something like arson, you're going to get a check. So who cares? Let's see the homes, bruh.
Wise for property addresses to be potentially, a target of people who are, on social media or whatever. So because of that, we keep that down low.
No, it's because he wants to keep limited transparency. That's why he's doing it. Nobody's going to come after your houses, clown.
Somebody writes here, bro is legit. Well, thank you. Yeah, I mean, this is pretty exciting. Shouldn't you be taking Lauren to breakfast instead of live streaming? I think Lauren is enjoying a Sunday morning sleeping in. It's very rare that she gets to sleep in. So I think that's one of her rewards, but don't worry. There'll be plenty of time for Mother's Day. Happy Mother's Day, by the way, everybody. So what are the plans with the equity? I think you're referring to our cash flow or the money that we're raising. And again, that goes to deploying that capital into opportunities like more wedge deals in Q3, Q4, just like we said when we created the company, or our ADU developments, or our spec developments, or whatever. Like wherever we think we can get the highest yield, where with the lowest risk, in our opinion, is the game plan. So yeah. Okay, we've gone through the balance sheet. Should we show you that? That should answer your question there. You could scroll back if you want to see that. How long is an investment in house hack locked in for? Well, I mean, technically, I believe I have this correct, but fact check me on this. A non-accredited investor has no liquidity restrictions, so you could sell your shares right away.
You might want to fact check that one. Liquidity is important. See, I have this thing called VT. I can sell it whenever I want and get the cash. You give Meat Thruster your money, it might be gone for years. Years! You should definitely fact check that. Okay? Highly recommended.
Regulation D, accredited investor, I believe, has a 6-month restriction. Fact check me on those timeframes. But basically, if you wanted to sell your shares to somebody else and you knew somebody who wanted to buy them, you could sell them. They're unrestricted shares. Now, the best time for liquidity, in my opinion, would be when the company IPOs in the future, because then you could just sort of you transfer your ownership in house hack to your stock brokerage, and let's say that's Robinhood. The house hack shares would just show up there. Whatever the ticker would be, say it's HH or whatever, and then you grab it and you just go, okay, well, I want to sell. You just swipe up the amount you want to sell. That's
HH. Interesting.
Obviously, when a company goes public, and that's one of the benefits of being public, is that rapid liquidity. So, what interest rates?
Oh yeah, he wants that liquidity, baby. Sell. Profit. Money. I'm a billionaire. I'm so rich. Oh my god. Oh. He wants a cloud market. If there's a cloud market like 2020, he will go public and he will make a fortune. That is a fact.
Are you targeting to refinance properties? I mean, I think they should certainly be under the market area, typical cap rates. So if you're investing in an area with a 5% cap, your debt should be under 5%. If you're investing in an area with 4 caps, your debt should be under 4%. I think that's usually a really good rule of thumb. I personally have the mindset that in the longer term, interest rates will actually be even lower. So probably by 2030, I think our interest rates will be substantially lower. Yep. So can you explain a home purchase by house hack from Kevin Paffett? Yeah. So we had a 4-unit apartment building with basically plans ready to go on a 2-unit ADU expansion. This was probably, we had multiple appraisals on this property, and I think the average appraisal that we had was somewhere around, I can't remember. It was I think we had 3 or 4 different appraisals, and our board reviewed this. I was uninvolved in even choosing the purchase price of what this would sell for because I didn't want to have anything involved in it. But it's
Okay, we'll let him finish. I got some questions here.
The only property that House Hack has purchased from me, I think it traded for 1.6. I think it appraised somewhere at 1.8, 1.9. And the reason I sold it was because I saw the potential of turning it from 4 units into 8 units, which is what House Hack is doing. And I don't want anybody to think there's a conflict of interest. So what I actually think we did is we de-risk conflicts by selling it at a pretty large discount to House Hack. Mind you, it was already renovated.
That makes no sense whatsoever. So let's say you own a house and you want to sell it. Because now that he sold the house, the corporation and the shareholders own it, right? If you want to sell your house and you can get 1.8 million for it, why would you sell it for 1.6? Why? You could pocket 200,000 more. If it appraised for 1.8 on the market, I would sell it to the market to get an extra $200,000. But oh, guys, from his LLC really toxic assets, you can't make this up. He decided to sell it for less than the fair market value. That doesn't make any sense. He sold it, okay? He could have sold it for 1.8. He sold it for 1.6. That's it. Makes no sense. You wouldn't do that unless there was some kind of issue going on there. What? Oh, I don't want an extra 200,000. I'm going to sell it. Conveniently, they found my property out of all the properties in the planet, and they bought my property. How convenient.
Renovated. Like it was already renovated with the House Hack formula. So like House Hack didn't have to go in and renovate it. It was already renovated. It was like, cool, operating property with great tenants. It was done, right? And then it got all the optionality of building 2 or 4 more units. So House Hack is getting all of the benefit of, our ADU returns are probably somewhere between 6 to 8%. I think on that deal.
Oh my God, dude. Oh my God. What's the name? Tell us the name of your LLC, bro.
Somewhere around 7.1%, which is really good. And so we're going to do a lot more ADUs. But so I was uninvolved in that process. It sold for probably a $200,000 to $300,000 discount to its fair market value. Probably even more of a discount now, given the ADUs that are being built on it. It's a really great property, and I actually think it deconflicts me because my goal is to get to have basically no personal tenants. So like I personally want zero exposure to tenants because I want.
Yes, that's why you could have sold it to a company outside of the company that you own. That would be really separating the two. And you could have pocketed $200,000 more dollars. The story doesn't add up. Meat thruster. Clown.
I want everybody to know that my focus is House Hack. Like, I feel like
learning pilot lessons and your YouTube channel and your private course streams. He's only
Focused on House Hack, guys. Nothing else. Nope. Daily live streams. Multiple videos a day. He's only focused on House Hack, bro. Trust me.
Oh, his Trumponomics course too. What happened to that?
Just the amount of even like outside efforts that go into House Hack, to me, are my way of justifying or showing that House Hack is my long-term baby. And I want everybody to believe that that's true because that's my vision. I want to be here in 30 years doing earnings calls like this. So hopefully then as
And I'll be here too, bussy boy.
a public company, goal is to be a public company by 2028 to 2030. But that's my goal. So that was actually a really good deal. I mean, that was a slam dunk wedge deal. I basically donated, I feel like, that loss to House Hack because again,
a loss? You made a gain. You didn't have a loss. Oh, out of the kindness of his little heart, his little grifty Grinch heart, he gave House Hack such a great deal. Who buys this nonsense? A lot of people.
I want people to look and go, all right, this guy's seriously all in on House Hack,
Yeah, that's what I thought. That's what I thought.
Yeah. But people make fun of my my LLC names. You should never use an LLC that's your name. I mean, have you never taken a course on from my real estate investing course? I literally.
Yes,
but you named the LLC Really Toxic Assets. Really toxic assets. Do you understand what toxic means? It's not good for you. It's bad. Yes, I'm making fun of it because it's insane. You could have named it Pathrath Home Buying LLC. Okay. Really toxic. You can't make this stuff up. What are you making fun of it, bro? Tell us the name, Kevin. Tell us it. Come on. Let's hear it. Let's hear it, bro.
In my real estate investing courses say, when you make an LLC, you should never title it with your name. You should title it something stupid like Mickey Mouse Trust or, Toxic Wasteland or whatever, because they're all.
I can't believe he's saying this. Oh, God. Out of all names, you chose Really Toxic Assets. And then you were so kind that a property that you had in an LLC called Really Toxic Assets, you just donated it to the business. Man, I can see why he has 2 million subscribers. Welcome to YouTube, ladies and gentlemen.
Always like prying eyes and attorneys or whatever. So I think not only is there comedy in it, but there's also anonymity in it. But, then there's also hopefully some practical effect in it.
Anonymity, you can find it in 2 seconds. It's not hard to find, especially in California. They have a whole website. You can just look up the California ID number and find the initial filing documents. It's all there. I do this in tax. It's not hard.
In it, but this is something that I've taught for over 10 years in my courses. What you'll find with me is I'm actually really consistent. People always joke. They're like, oh, Kevin changes his mind or whatever. No, I adapt to business conditions. I adapt to.
Oh, yeah. Oh, the stock went up today. Buy it. Oh, the stock went down next day. Sell it. Yo, you're very consistently clownish.
Macro, but I'm very, very consistent with my principles. Buy wedge deals, buy quality wedge deals, protect the base. House Hack has such good protection. We have no bank debt. We have, in my opinion, it's like, obviously, the SEC has to tell you via disclosures, and the SEC, you have to say any company could exhibit, loss and go bankrupt. But like, how stupid do you have to be to bankrupt a company that has no bank debt and has $60 million plus of real estate, again, with no bank debt and what, $12 million of convertibles, where we literally have $12.5 million of cash, rough numbers right now. You have to be pretty dumb to screw that up. But again, that's my opinion, and there's risk with any investment. So that's really exciting. That's a good question as well. Somebody here has talked about lending. I'm always a big fan of limiting lending. We have never lent. I think in the longer term future, there are some opportunities in technology and fintech and with home equity lines of credit. That's probably more for after any kind of recession or market kind of correction, should there be a larger one, mostly because you don't want to lend going into a rough environment. But those are longer term, small capital deployment tests that are not in the near term book for House Hack. So there we have it. This was a very good, about $43 million. $43 million. The company was $60 million. 43-minute first ever Q1 House Hack earnings call, which is really, really amazing. So I appreciate you all very much for being here. Thank you so much. Hope you enjoyed looking at our financials. EBITDA profitable. Congratulations to the company and everyone else. And somebody here says, how Kevin has been consistent since 30,000 subscribers.
Well, you didn't mention let's see. He didn't talk about the loan forgiveness. Okay. I appreciate this comment, Mr. Nobody. I appreciate the comment. He didn't talk about the $800,000 of loan forgiveness that you, the investors, were owed, but never received. And now Kevin has all the voting shares and he only paid, what, $200,000. The high employee salaries of McKay. Let's talk about that. SEAL Team 6. He talked about buying his own property. And some very important stuff was missed there, Kevin.
He has been consistent. I've been with Kevin since 30,000 subscribers. He's been consistent. Oh, thank you so much for that, Rambler. I think that's really nice. What areas of Florida? To be determined. But remember, I spent 16 years growing up in Florida. I know a lot of different markets in Florida. You know, I don't like pre-revealing the markets that I'm targeting, but there's some really juicy ones that I'm looking at. Anyway, thank you so
Hurricane season.
very much for being here. Appreciate you. If you're interested in investing in HouseHack, go to househack.com. Remember, if you invest in the current non-accredited or accredited round for convertibles, you are investing at $1.40 per share. You get all of the upside, 100%. There's no premium. It's not like MicroStrategy where they're selling you shares at, you know, $400 on their convertible, but you only get the conversion to shares if it's $600 or more, which is, in my opinion, a detriment to you. You get 100% of the upside. And unlike
and all the downside, which more likely than not will be zero.
MicroStrategy offering you a 0% yield on their convertibles, you know, or a 0.9% yield on their convertibles, we're offering you 5% as a yield.
After tax equivalent to a treasury.
Yield, which comes from our rents, our cash flow, and of course our future rents that we deploy. So we think we have a really good offering. You invest, you get that yield paid to you on a monthly basis through ACH. So again, you get all of the upside above $1.40. You get a 5% yield on an annual basis paid to you monthly. And when we convert and eventually go public, you benefit from all of the upside of the shares. Hopefully there is a lot of it. Obviously no guarantees. Read the disclosures we have, read the solicitation materials, the upside risks, the downside risks, and more. And I appreciate you all coming to the first ever HouseHack earnings call, Q1. Thanks so much for watching. Goodbye.
Wow, that was amazing. So how do you guys feel about that? Let's do some comments. Oh, my Lord. All right, let me turn off my phone here. All right, we'll do some comments, and then Daddy Long Dong is going to go for a run, probably. I got to run off the stress of listening to that nonsense. Jesus, there's a lot of comments here. Oh, my God. Is there a way I could jump to the top? All right, this is a link to my services if you want tax preparation, bookkeeping, sponsored videos, one-on-one consulting, and my book, Stop Being a Broke Loser. I also have a free Discord where we expose clowns. We talk about clowns. We track them. That's also in the link. You can join the Discord completely free, and we make fun of grifters like Kevin. And if you see anything stupid that any grifter says, you're more than welcome to post it in the Discord. So check out all the services. It'll be worth your while, and you might actually see some benefit for the services I can provide. I'm a certified public accountant, but, you know, Kevin, he wears a suit. The grift never stops. If you have a penny, you'll be grifted for that one penny. Oh, now he's raising the price per share. Let's see. And he never mentioned the dividends. I wonder where those dividends are coming from. You know what I'm saying? Like, is he buying stocks? Meet Kevin's SEC filing is amusing. Dude pays himself over $1 million per year and his sidekicks $300,000. He didn't mention that at all, bruh. He didn't mention that at all. That's very interesting. I randomly found your channel a week ago. Oh, me and Kevin go way back, buddy. We go look at my most viewed live stream. Me and Kevin, you know, we've had a on and off again relationship. He actually offered to hire me. I'm like, I'll think about it, Kevin. Let's see. 400,000 of that loss was due to a single deal house hack. Well, it wouldn't count as a loss. It would go into the property, plant, and equipment. Basically, he took shareholder capital and he purchased his own home at a profit for the company. And it logically doesn't make sense because if you get 1.8 on the market, you would sell it for 1.8. You wouldn't sell it for 1.6 to your corporation. Okay. And yeah, he did rent to himself. Of course. Let's see. First, he called House Hack his Robin Hood, then his Vanguard. He compared House Hack to Vanguard. This guy is delusional, man. But you know what they say? You got to be delusional to be successful. Let's see. Me, Kevin, spent 70 hours on House Hack, 60 on YouTube, 40 sleeping, 40 on raising kids and dealing with his wife, and 20 hours for leisure. Yeah, I'm sure that adds up to a full week here. Let's see. I'm trying to find interesting comments here. Househack paid for the jet by forgiving his note for the stock. I mean, indirectly, that could have been a reason why. But then he said, Househack isn't paying for the jet. So you got to ask, what was the real reason that they forgave $800,000? And why can't he afford to put $800,000 into the business? If he's such a Richie Rich, he could have sold his property for more than he sold to the corporation and then took that capital and invested it. But he didn't do that. No, he sold it directly to the corporation. Imagine if I told my boss depreciation isn't a real expense. Yeah, especially in a real estate company. The two biggest expenses, interest and depreciation. Oh, it doesn't matter. Oh, God. He's also potentially buying homes at the top of the market in LA. So many people are even. Exactly. If they liberalize laws, he's in trouble. Because he's paying a pretty premium for these properties. Because like he said, it's like there's all these regulations and rules that limit construction and all the properties are expensive. This could end very badly. Oh, God. He's all butthurt. SEAL Team 6, Berkshire Hathaway. He might as well just call himself God. Just call yourself God, bro. Call yourself the new Jesus. Let's see. Yeah. Oh, guys, if you need some diversification from a total market index fund and debt backed by the full faith and credit of the United States government, you should buy into an illiquid private venture by a CEO that has had multiple run-ins with, FTX and his PP ETF getting delisted and all the clown stocks that he bought and how he constantly changes his mind every day on the economy. You need to diversify with that guy. There's no better place to put your money than Meet Kevin. How much will the next debt forgive? Well, nobody gets forgiveness except Kevin. That's how it works. Why is he comparing himself to Navy SEALs and Warren Buffett? Because his moron fans believe it. God. I'm starting a new company called VT Hack. Oh, I would take your money. I'd have all the voting shares. And I would buy VT and I'd give you guys 1% a year. And then I would get the rest. Let's see. In 2021, Meet Kevin posted a $52 million stock portfolio. He lost a lot of that buying Tesla at the top and selling at the bottom, but still should be in a lot left. Why is that money not invested in Househack? You know what, Jay Pow Pow? I have no idea. I have no idea whatsoever why he hasn't invested what he claimed he invested. Now, I don't know how much he put into convertible bonds. Correct me if I'm wrong, but I remember him saying he was investing in the business too. And then he actually didn't. So is that okay? I guess so in America. Good Lord. Good Lord. 5%, just do it. Exactly. All right, guys, that was a interesting conference call. I'll be reacting to every single earnings that he does. And when the reports actually come out, when they actually are produced and are uploaded to the SEC website, we can review those as well. Have a wonderful, delicious Mother's Day. Cheers.